Hello everyone, I hope I'm live now. Give me a few minutes just to check. Give me a few minutes just to check. Okay. So seems like everything is working fine and we are good to go. So hello everyone and welcome back to Financial Impulse. So this week Jefferies, American investment banking company, has actually said 11 stocks, the name of 11 stocks, which can give return of 15 to 25% CAGR in the next 5 years. Okay, so does this mean that we can blindly go and invest in these stocks at any time because it is recommended by a renowned investment banking company of United States? Well, obviously no, it's not that easy. We cannot do that, and that is not the right way to approach to make an approach towards equity investing. And if things would have been so easy, then it would not have been so difficult to make money in the stock market. We obviously have to do our own analysis in order to decide if we can consider a stock for investment or not. So in this video I am going to analyze all the 11 stocks fundamentally and also the price action, and let you know which are the stocks which can in which you can actually invest and which are the ones which you could ignore. Okay, so one thing I noticed about all these 11 stocks is that most of the stocks have actually higher FIs holding, even more than the promoter. Okay, the promoters have less holding, the FIs have a lot of stake in this company, and these are the stocks picked by Jefferies. So does this mean these are bad companies? Well, obviously no. It could be indicating that the FIs are actually pretty confident and think that these companies are really promising. That's why they are having huge stocks, and they could be managing the company very well, even better than the promoters, and that could increase the stock price exponentially, which could obviously be beneficial for us as investors, and that is what we want. So we have to properly analyze all these 11 stocks, and I am going to help you in doing this. Okay, so let us start. Let me first show you the article in which it has been published. Okay, so one second. And okay, so this is the article. Jefferies picks 11 stocks that can deliver 15 to 25% CAGR return for 5 years. Okay, and what are the stocks? Okay, I have made a list here. Okay, and I am going to discuss one by one. Okay, so let us first come to the first stock, that is Amber Enterprise. Okay, so and if you are facing any problem with the the live streaming, please write in the comment section and I will check if it is smooth or not, the streaming is smooth or not. Okay, let me just test it once again. Okay, okay, looks like the streaming has paused for some reason, not sure why. Okay, and okay, let me know if you are facing any problem. I think it should be working fine. Okay, so now coming to the first stock, that is Amber Enterprise. So this is Amber Enterprise, and let's read a little bit in the about section what this company does. Okay, it is incorporated in the year 1956 and has a 23.6 share in total room air conditioner market. Okay, so it is into air conditioning market. Okay, and it is prominent solution provider for air conditioner OEM ODM industries. Okay, so it's a good emerging industry. We know that because India is obviously facing a lot of heat these days, and the temperature is obviously going to increase in future, and so these companies are going to have a lot of demand. That is what we feel. Okay, now coming to the basic fundamentals. Okay, the company's market cap is 11,800 crores. Okay, 883 crores with a reserve of almost 2,000 crores. The debt it has is 1551 crores, and debt to equity ratio is 0.79, which is not great, but I would say it is good. Okay, it's less than 1, so it is good but not great. Okay, sales average 3 year sales growth has been good at 20.46, but profit growth and earning per share growth are struggling to show some positive sign as well. Return on asset is on the lower side, but we can see the other companies are having more or less same. Okay, although Amber Enterprise has lower than that. Okay, so it is on the lower side. Return on capital employed 9.46%. Okay, so this is also kind of average. We cannot call it great, but it's average. Interest coverage ratio 2.28. This is not a great number. Okay, and if you remember, few days back I analyzed Kaizen's Technologies and I recommended it because it has the signs, the growth signs of this company is really good, and you can see here also the numbers are actually much better than Amber. Okay, so let's see how good Amber is. Okay, current ratio 1.08, not a great number, but it is fine. Okay, and coming to operating profit margin 6.48. Okay, 6.48. This number is also looking low. You can see the other companies are actually having more than that. In fact, I think Amber Enterprise has the lowest operating profit margin in this entire industry. So don't know why is that, but that is what the fact is. Okay, now coming to promoter holding 40.31%. Okay, so 40.31% is the promoter holding, which is a decent number, not a great number. Altman Z score 6.73. Okay, this is also an average number, not a great number. Now let us see if this company has been growing year on year or not. So let's consider the last 3 years performance. So if we consider March 2022, 2023 and the trailing 12 months, we see there has been a huge growth from 2022 to 2023, but then in the trailing 12 months it has almost been same. Okay, but we can see the increase in operating profit margin since 2023. That's why although the sales were almost same, the operating profit margin has operating profit is higher than the 2023 operating profit, and you can see a good growth from 2022. So overall we can say that it is a growing company. Okay, not a continuous smooth growing company, but a growing company. That is what the scenario looks like. Okay, now coming to the shareholding pattern. So the promoters are holding 40.31%, and in fact they have slightly increased if you compare it with March 2021 numbers, 40.27, 40.31, and FIs have also slightly increased. Okay, 28.06 to 28.29, and from here you can see they have slightly decreased. So they increased it here from 24 to 29, then dropped slightly. Okay, by less than 1%. Don't know what the reason could be. DI's holding has increased significantly by 1.6%. This is a good thing. Okay, so the smart money and the promoters are actually increasing stake in this company. This is what the fundamentals is telling us, and the other numbers are not great but kind of average. Okay, now let us look at the price action of Amber Enterprise. So this is Amber Enterprise in weekly time frame, and we can see after hitting a high of around 4,600, it started dropping and it has almost dropped by maximum 33%, but closed at 27%. Okay, so not a great drop. Okay, which is fine. And if we want to come to the final conclusion, can we invest in this company right now or not, then we have to do a proper analysis. So let me use the fifth retracement tool. Okay, so to check where this stock is actually taking support right now. So in the weekly time frame, we are getting to see that the stock in this week, today is Friday, and it is starting to show strong support, strong bullish movement here in the 0.5 level, which could be indicating that the stock is actually having a good support level at 0.5, and from here it could start turning upwards and it could continue a rally. Okay, once it breaks this 3,559 level. Okay, after forming a proper base here. Now let's see if there is any moving average aligning with the stock or not. So the first thing that we are going to check is obviously the 200 days moving average. Okay, so let me enable it. Okay, there we go. And we can see how nicely this stock is actually resting on the 200 days moving average. Okay, so this is clearly telling that if you want to invest in a company and it is steadily growing and it is at 200 days moving average, then that makes it at the that puts it at the perfect buying level. But the question is, can you directly go ahead and jump into this stock? Well, for that question to be answered, we need to go to the daily time frame. So let me go to the daily time frame and let me mark the 0.5 level here and remove the fib retracement level, so that the chart becomes a little bit clear. Okay, so this is the 40 weeks. Now let me go to the daily time frame and open the same 200 days moving average. Okay, and we can see how nicely the stock is actually bouncing off from the 200 days moving average. Okay, now the question is, can you make an entry? Well, you can only make an entry once it breaks the 50 days moving average and makes it its support. Currently the 50 days moving average is actually acting as a resistance, as you can see here. Okay, so in the coming days I believe that the stock will actually break the 200 days moving average. Okay, and once it needs to bounce above this one, we need one bounce definitely. Okay, let's say the stock is coming down from here, then going up and then making it its support, then only you can make an entry above the 3550 level. Okay, 3550 to 3700 level. This could be the ideal level above which it can give a breakout and start a rally. Okay, so you have to keep watching this stock. And if you just want to make an entry and you're a pure long term investor, you do not have a problem in buying little bit early and staying in negative or 0% returns, then you can invest right now, because the simple reason is it is near the 200 days moving average. Okay, it is the ideal price. Okay, and once a stock makes this its support and starts rally, then it continues for a long time. Okay, it could give a huge rally depending on the strength of the stock. Okay, give me a few minutes, let me just check the live streaming status if you are all good or not. One second. Trailing 12 months, it has almost been same. Okay, but we can see. Okay, looks like we are all good. So now the thing is, you have to wait for the stock to at least break one level. So in order to decide a proper level for after which we can enter the stock, let us use the super trend indicator in daily time frame and see what it has to offer. Okay, so you can see the super trend is telling that this is the nearest resistance. I have drawn a line 3692, so 3700, let's say. Okay, so we have to wait for the stock to actually break this level, okay, with a good volume, and the 50 days moving average should act as support. That is a mandatory thing. So that will be the precise proper sniper entry for Amber Enterprise. Okay, and if you want to invest some amount right now and then wait for the stock to break this 3700 level so that you can add the remaining amount, that also you can do, but do not invest all the amount right now. Okay, do not do that, because it has in the in the long term it is definitely in uptrend. Okay, but in the short term it is in downtrend. Okay, and now after downtrend, obviously it is not going to give a U-turn directly and go to uptrend. It will go for sideways. It will give sideways action for few more days. Okay, and then once the stock gets strength and the bulls are super active, then only it will give an uptrend. Okay, so we have to wait for the stock to break this 3700 level. Okay, so that will be a proper entry for Amber Enterprise. Okay, so that was all about Amber Enterprise. Now let us go to the next stock, that is Ambuja Cement. Okay, so Ambuja Cement. Okay, so we do not have to obviously go discuss what Ambuja Cement does. We know it very well. Okay, it is into the cement industries. Now let's quickly take a look at the important numbers for Ambuja Cement. So the current market price is 590 with a market cap of 1,17,000 crores. Okay, the reserves it has is 32,509, which is a good number. Debt is 745 crore and debt to equity ratio is 0.02. Okay, so this is an excellent number, I would say. Last 3 years average sales growth 12.84%, and you can see the other companies, let's say the top 4 companies in this list are having almost similar sales growth. So we can, from that perspective, it is a good number. Last 3 years average profit growth, you can see this is in positive 10.17%, whereas the other companies are in negative. In fact, everything is looking in negative to me. Okay, you can see Ultratech is in negative, Shree Cement in negative, ACC Cement in negative. Okay, for 3 years profit growth. So in that sense, Ambuja Cements is looking strong, and same with earning per share growth. Okay, everything is negative except Ambuja Cement. Return on asset last 3 years. So this number is good, I would say. Even in fact, it is more than Ultratech Cement, the market leader. Return on capital employed is 14.81. This is a good number. Other companies are having similar numbers. Okay. Interest coverage ratio 25.39. This is a good number, and in fact, it is looking like, you know, the highest number in this industry. No other company is having close to this one. Okay. Current ratio 1.82. This is also a very good number, and it is much more than Ultratech Cement. So this puts Ambuja Cement at a good spot, and we can clearly say that fundamentally it is looking strong, in fact the strongest in the industries. Okay, operating profit margin 18.43. This is a good number, and you can see other companies are having similar kind of operating profit margin. Okay, even Ultratech has less than that. Shree Cement has 20.39, but ACC Cement, JK Cement, they have less than 18.43. So it's a good number. Promoter holding 63.19%. Okay, so this is obviously a good number. Altman Z score 5.55, and we can see the other companies in this industries are having similar kind of Altman Z score. So we cannot call it good or bad. So it's same. Okay, so in fact it is fine. So the fundamentals of Ambuja Cements are looking good. Now let's take a look at the year on year profit and loss in order to decide if it has been growing or not. See, in the 2021, the sales was 28,965 crore, which went up to 38,937 crore, and then it dropped in the trailing 12 months to 32,232 crore. But it's not a bad thing, you know, these things happen. Does not mean that it will start declining from here. No. It could be a temporary drop. So we have to check the other factors. Okay. Operating profit 6210 to 5122. So this is a problem here. From 21%, the operating profit margin dropped to 13% in 2023. But again, it has jumped up to 18%, and that's why we are getting to see increase in operating profit despite of the sales getting dropped. Okay. The sales dropped, but the operating profit has increased because increase in operating profit margin. Okay. Now let's take a look at the shareholding pattern. Okay, when we see the shareholding pattern, we see that in the last 3 years, the promoters have not reduced their stake by huge margin, just 0.1%, which is fine. Okay, and FIs have decreased their stake by almost 6%, DIs have increased by 3%. Okay, and if we compare it with the previous quarter, we are getting to see FIs have slightly increased the stake by 0.23%. Okay, and DIs have increased the stake by 0.3%. So this could be indicating that the stock might be starting a turnaround, or it could be heading for, you know, a good rally or a good breakout. That's why the smart money have spotted this, and they have made their increase the stake at the precise point. So we will get to know all of these things once we go to the price action. So let me open the chart for Amber Industries. Ambuja Cement. This is Amber Industries. Ambuja Cements. Okay, first we'll start with the weekly time frame. Okay, so this is the weekly time frame, and we can see Ambuja Cement has broken its all-time high. Okay, the all-time high has been broken here, you can see, and after that Ambuja Cement is starting to show strong signs here, because we are getting to see back-to-back big wicks in the candlesticks. Okay, and this is a clear indication that the stock is having strong bullish support at this level. The level is around 560, we can say. Okay, so there it is having strong bullish support. So let's see where the 40 weeks moving average is. So it is far below, so I think it will have the support of 50 days moving average. Let's go to the daily time frame. So here is the daily time frame, and as I already discussed, we are getting to see some good signs. Here is one piercing pattern. Okay, piercing pattern, and the next day's candlestick also closed above the half of this level. Okay, so that's a clear sign of strength. Now let us see where the 50 days moving average lies. Okay, and we can clearly see that the 50 days moving average is actually providing support to this stock right now. Now the question is, should you go ahead and make an entry right now? Well, I think the entry time is almost near and you might be able to make an entry. Let us check the momentum indicators to get a final outlook on this stock. Okay, so we can see that the momentum indicators, the RSI level is below the moving average. Okay, so what we have to do is we have to wait for the RSI level to break above 60. Okay, and this moving average should also act as a support for the RSI level, and also the crossover will obviously happen by that time when all these things happen. Okay, and I think by that time the price action will obviously break this level, okay, and start going up, and the 50 days moving average will also provide support to this stock. Okay, now let's use the super trend indicator in daily time frame to see the nearest resistance level which it has to break. Okay, so the super trend indicator is telling that it should break this level, but I think in coming days it will show a drop and it will make this level as its resistance. Okay, in coming days. So in order to get another point of view, let's use the pivot points. Okay, so you can see the pivot points is also telling that it could be, this area could be acting as resistance. Let me draw it. Okay, this area could be acting as resistance. Here is one, the previous month's R1, and this is the the current month's P. Okay, so in between this lies the breakout level which you have to observe, and once it gets broken with good volume and the support of the 50 days moving average, then only you make an entry. If you are already holding a stake in this company at a much lower price, then you can definitely add units right now. You do not need any confirmation because you must be at a good profit. You can start adding now, but only for fresh entries I am telling this, you have to wait for this level to be broken. Let's say 600 level. So this is 610. So 600 level needs to be broken with strong volume in order to make a fresh entry in Ambuja Cement. So that was about Ambuja Cements. Now let's go to the next stock. So the next stock is Axis Bank. Okay, let me open Axis Bank. Okay, so you can see that the Axis Bank is the third largest private sector bank in India. Okay, and the fourth largest issuer of credit cards. Okay, so we know the basics about Axis Bank. We do not have to go through it too much. Okay, now let's take a look at the year on year growth rate. Okay, so in order to decide how strongly this company is growing, okay, this bank is going. So you see the sales of this company are increasing sharply. Okay, from 68,846 crores to 87,488 crores, then 1,07,000 crores. So strongly the sales are growing, no doubt about that. Operating profit, it is also growing at a very healthy rate. You can see 2,710 to 13,060, then 11,516. The reason behind this drop, despite of the increase in sales, is the decrease in operating profit margin from 15% to 11%. So let's take a look at the other banks' operating profit margin, okay, in the peer section, so that we can get an idea. So we are getting to see that Axis Bank is actually having the highest operating profit margin, 64.17%. You can see HDFC has 47, ICICI 36, Kotak Mahindra 18. So in that sense, it is really good. Okay, now let's take a look at the shareholding pattern. Okay, so the shareholding pattern for this company has been on the lower side. Okay, which I already mentioned in the beginning of the video, that most of the companies are actually having lower promoter holding. Okay, and the majority of the stake is being held by the FIs. Okay, in many companies, not all, and we have started seeing one company like that, that is Axis Bank. Okay, so promoter holding is 8.20%, FIs holding is 54.68%, DIs holding is 28.83%, and if we check in the last quarter, FIs have increased the stake by 1.68% and DIs have slightly decreased their stake by 0.2%. So we can say almost the shareholding pattern of Axis Bank is looking stable. No problem with this at all. Okay, now let's take a look at the price action in order to decide if we can make an entry in Axis Bank or not. Right. So this is the daily time frame for daily time frame chart of Axis Bank. Let's go to the weekly time frame. Okay, and this is the weekly time frame, and as of now I am seeing that this level is acting as a resistance level and Axis Bank is not able to break this level. Okay, and we are getting to see back to back big red candles near this level. Okay, so if we consider this as the resistance level, I can draw one resistance zone here easily. Okay, if this is the resistance zone for Axis Bank, then we have to wait for this zone to be broken. Okay, because seeing the strength of the bearish candle, okay, the price action is looking weak, although here the resistance the support could be there. Okay, so let us draw the support here as well. Okay, this is the support. So this could be acting as a support, but we need a confirmation. It could be that Axis Bank will give one more swing like that before giving a break. So if that happens, we can draw one trend line easily, and here we can make our entry. So let us see the moving averages where they are aligning. So this is the 40 weeks moving average, and we can see Axis Bank is right at the perfect point for entry, and it is near 200 days moving average. But we do not know if it will directly bounce from here, okay, or go little bit downside and then start giving an uptrend. Okay, so for people who are already holding Axis Bank at a lower price of 800, 850 or 750, for you it is a good time to make an entry. But for fresh entries, we have to wait for the stock to actually give a proper breakout. So what I think is that you can buy partial amount here because it is completely aligning with the 200 days moving average, which is the 40 days moving average, you can see. Okay, and then once it breaks and starts showing strength, okay, along with that the momentum indicators confirm that it is starting to go up. Okay, you see the momentum indicators have also not yet confirmed. Once they go above this 60, okay, with strong momentum, then and the price action shows some similar kind of pattern, then only make an entry. So I think 1100 will be a good time to make a fresh entry. But if you want to buy some units right now because it is available at a lower price of 1040, you can invest. Okay, 50% of the amount, not much, just 50% of the amount. Keep the remaining 50% for investment after the breakout is confirmed. Okay, that will be a proper strategy for Axis Bank, right? So that was about Axis Bank. Okay, now let's check the next stock, that is Bharti Airtel. Okay, so let me open Bharti Airtel. Okay, so this is Bharti Airtel, and we can see the market cap of Bharti Airtel has actually become really huge, 7,31,000 crores. It's a good thing. Okay, but this could also mean that the growth from this point could be slower, and it will obviously not be like a mid cap or small cap company. It will be slower, on the slower side. Okay, so let us take a look at the basic numbers. So we just have to compare the profit and loss, and because it's not really necessary to compare all these numbers in this telecom sector because they will be really confusing. Because if you see, okay, let's do the comparison, not a problem. The 3 years average sales growth 16.70, 3 years average profit growth 5.93, earning per share growth 7.62, return on asset 2.92, and ROCE 9.94. So these numbers are looking fine, not great but fine. Okay, and coming to interest coverage ratio 1.89, this is kind of obviously a lower number, but obviously in telecom sector we cannot expect to have high numbers. Okay, so that is why I was not not thinking about doing a proper ratio analysis for this company, but just showing you, because you have to check some numbers like, let's say, the sales growth, then the operating profit margin. These things you have to check. Okay, so you see the operating profit margin is high at 52.3%, and if you compare it with other companies, it is much higher than that. Okay, promoter holding at 54.57%, good thing. Altman Z score 3.42, it's not a good number, I would say, but obviously you have to check the growth. Okay, we cannot compare it with the general standard. Now if we check the last 3 years sales growth, okay, 3 years sales growth, 1 second please. Okay, yeah. So the 3-year sales growth is looking decent. 1,16,000 crores to 1,39,000 crores, then 1,42,000 crores. Profit growth is also there from 57,000 crores to 71,000 crores, then 77,000 crores. Operating profit margin is also seeing an increase. Okay, 49% to 51%, then 52%. And if you compare the last, even for the 3 quarters, you will say even further increase, 32% to 42%, then 42% to 45%, then 45% to 49%, then 49 to 51, 51 to 52. So very good increase in operating profit margin. Okay, so this is a very good thing for Bharti Airtel. Now let's take a look at the promoter holding. So in the first glance itself, we are getting to see that the promoters have slightly decreased their stake by around 1%, but the FIs have increased their stake from 2021 to 2023 December. Okay, 18.57% to 22.69%, and you can see they have increased in the last quarter also and the previous quarters also. From this point, 20.97 to 21.49, then 21.49 to 21.87, then 21.87 to 22.69. A very good increase in stake by the FIs. Okay, and DI's holding has almost been the same, not much change. Okay, but the government has now started taking stake in this company. In March 2021, they are having no stake at all. Now they are having 0.12% stake in Bharti Airtel. Okay, which is a good thing. Okay, now let's go to the price action and see if this stock is a growing stock or not.